Hello again, everybody. It's Harry Box, the Technical Trader. I'm back from the New York Traders Expo. That was a lot of fun, and it's time to get back to work. The market has suffered two consecutive pretty sharp down days, and the back of the market may have been broken here. We could be headed lower, and although we're short-term oversold, we're going to have to carefully watch the next few days, particularly the bounces and whether they come on low volume and whether technicals, market-wise and individuals are going to be negatively diverging or not. Anyway, let's look at some of the boxes shorts tonight. We're going to start off with Broadcom. You'll see that the run up from the 30 range up to the high 40s over the past few months stopped in early December, and then had a rounding top and it broke down this week. You can scroll in and see that we've had two consecutive ugly down days followed by a little late bounce today, but still the stock remains in a precarious negative positions with the moving averages rolling over and crossing over, and the neckline on the head and shoulders or topping pattern having been broken dramatically here. The gap at this here in October, however, may act as some support, and we could see a bounce back towards the 42.225 range. That would be an opportunity to short, particularly if technicals do not confirm and the volume is low. Moving on, CELL, Cellcom in a negative looking configuration. And in the down channel, of course, has broken out of this bear flag we pointed out over the last week or so, where they roll over thrust to the downside to pick up in volume, and certainly a test of the 29.5 area may be forthcoming and rather shortly. If that's broken, next target around 27.25, and then beyond that, something under 25 could occur should the market really roll over in a negative way. Credit Corp, BAP, down $1.28 today, continues its negative decline in a very orderly channel. The recent little pattern here that looks to me like a bear flag formation was broken today with that $1.28 drop, and at this point an additional down move could take place, which should get this down towards the low 90s short term, but a much more rapid decline may ensue that takes us down to the 87.5, 88 zone, and then secondary target around 80. Cree looking pretty ugly, dropped another $1 today on top of yesterday's 221, and as you can see, did bounce after pressing support in this zone here over the last several weeks. The stock bounced a little at the close, but a failure to follow through to the upside and a rollover that takes out today's lows around 50.5 could result in a quick test of that 47.5 area and maybe 48. But for the most part, if Cree breaks that area, I'm looking for something down that could eventually get down into the high 30s, low 40s. Now CTRP, which has been rolling over, and it's in a nice steady declining channel that broke key support recently and has extended. Now we have minor support in this area, and we could see a potential bounce back, but that would be a shorting opportunity in my opinion. At this point, I'm looking for at least something down towards the 33 area, and then potentially down around 30 eventually. FCX, Freeport McMoran, certainly looks like after a big run up, the stock has topped and begun to roll over. Yesterday's move, which was down 257, you can see gapped a little bit and cracked key lateral support. It was a bit of a follow through and a little bit of a reversal when some of the precious metal and mining stocks firmed up while the market collapsed today, and as well as the oils, of course, but we'll get to that later. But I think that the target on this one's around 45 short term. FFIV looking quite the negative pattern here, with a huge gap down and then a rally back that went right back up to the moving averages and failed and began to roll over. Literally every day this week, the stock has been, or every day the last, let's see, it's 1, 2, 3, 4, 5, 6 days in a row, the stock has been rolling over and accelerating once it broke that line there. I've tested the lows may be forthcoming. That's around the $100 area, but I expect that eventually, if we do not get a quick rally and a snap back in the market, that this is the kind of stock that could be down in the 90 range at some point in the not too distant future. GSIC, GSI Commerce, which had broken this wedge pattern here, is now rolling over. It bounced back to that line, and then today dropped 56 cents and maybe headed towards 18, 18.25, and then eventually down around 16.5. HWKN, which had a nice run up and then spiked down in January, has been forming nothing but a bear wedge since, and if this breaks soon, we could see a quick move down towards 34.5, followed by eventually something closer to 30. Those are my two targets. Very negative looking pattern for HomeX development, which cracked here, bounced back here from the bear flag, and then rolled over hard this week. There is some support down around 27.5, but a break of that, and we're looking at 23.5. ROVI of OV Corp, which I just found this weekend, has really taken it on hard times. His head and shoulders top was broken here. Follow through yesterday, and another big hit down this morning to 51.11 before a $3 snapback brought it back to 54.35. But nevertheless, only because it was so oversold short term did this rally occur, in my opinion. And I don't believe we're going to see much more than 57.5, perhaps a little higher, but that would be any rally up in that level could be an opportunity to short. There was certainly some very heavy selling these last 5 days on the way down, so watch for the snapback bear formation consolidation to that form. Skechers, which has been ugly for now 7 or 8 months, could not get back above its late November high. Recently rolled back over and is now pulling back to retest the double bottoms down around 19.25.5. That's broken. Look out below. SKX could be in the mid-teens before long. SXT, Sensient, excuse me. Nice long rising channel over the last 4 or 5 months. And then rolled over, bounced, failed, and rolled over again with a gap from the little bear flag. In the last 2 days, it's backed off once again. I'm looking for a move to the bottom of this channel around, let's call it 31. And then below that around, well, there's some minor support at 30.5, but I'm actually looking for a stock to eventually make it down to the high 20s. TCK has rolled over, broken its major up channel. Here's the channel bottom and your channel top. At this point, I'd have to say that it looks to me like this stock could see lower levels. My first target on TCK would be somewhere near this top and those bottoms right there around the, let's call it 45 range. So about a 7-point hit. And beneath that, potentially down in the 40 area for tech. Target TGT, big. You can see this big gap down is what started this in January. Consolidated, rolled over to a secondary low and snapped back. It's really come down hard in the last 2 weeks. Moved up from 55 to 50. Big volume in the last 3 days to the downside, perhaps signaling a bit of overbought selling climax. But at the same time, a key level of support. 2 of them have been taken out, and very likely a test of this secondary support down in that zone there is what I'd be looking for. A test of about 48 short term, and then 45.5 beyond that. And lastly for today, BMW, which has a very distinct head and shoulders for me. Left shoulder, head, right shoulder, bear flag, roll over, testing the neckline right here, and just measuring the head to here, you'll get a move down towards 70.71. That's my trading target for BMW. Those are some short ideas for going forward, and we will talk to you tomorrow night.